All right, the man himself, White House National Economic Council Director Kevin Hassett, speaking to Fox News earlier about the possibility of becoming Fed chair. That's after Bloomberg reported that he's now the front runner. Welcome back. You're watching Insight. We're checking markets here this morning, and yes, the news of a possible chair Hassett around the Fed that has lifted risk sentiment across the board here in Asia. And we're seeing that follow through from the U.S. session, where dollar was weaker, Treasury yields also leading yields lower there as well, and that's really helping the bond space there this morning. You take a look at how, risk assets are looking at. Stocks are up about 1.5% here. U.S. futures continue to punch higher, and the dollar is softer here in the region. And you're seeing really the Nikkei punching 2% gains now. There you go. Same goes the topics, the Kospi, Taiwan, some of these tech-heavy benchmarks certainly liking the news there. We're up 1%. Even China looking okay, despite now this plunge in Wonka. Bonds, once again, leading to concerns about the property market. Those Alibaba earnings also didn't look as good for traders out there. So they're still seeing signs of green out there. The Sensex, meanwhile, the India markets have been open for about half an hour now. We're up about 0.4%. We're watching very closely, of course, New Zealand assets, given what we saw. There was a rate cut there, but take a look at when it comes to the Kiwi. It didn't look that way. We saw a strengthening of more than 1% for the currency here. There is a speculation that may be nearing the end when it comes to rate cuts there in the RBNZ. So that's why you're seeing that might be a hawkish cut coming through from the RBNZ. That's how the market is interpreting that here today. But certainly today is certainly a day for risk, but certainly it's been quite volatile. Let's bring in a little bit more on the pulse check on what 2026 might look like, and bring Uday Sareen, APAC CEO and APAC head of wholesale banking at ING, joins us in our Singapore studios. Uday, it's great to have you here in the program. Thanks for joining us. Obviously, this has been a year of rotations, increased volatility, given what we've been seeing with tariffs and the like. And we're finally kind of ending this year on a little bit more on the solid front when it comes to this U.S.-China trade truce and the like. How are you looking at 2026 now in the business?
Yeah, thanks, Yvonne, for having me. Yeah, I think a large part of what we're seeing in our business across the 11 markets of APAC is a large part of the growth, and there's significant traction in what I call the APAC Euro corridor, and be it in terms of just the APAC debt capital markets. That's been a big strength. They're back. USD issuances, which used to be about the covered bond issuances by corporates in the vicinity of about 90 billion. They're up almost 26%. But also, just going back to the corridor, we've seen positive traction on euro issuances. So with diversification of clients in terms of funding, and that's up like 70 odd percent. Yeah. I mean, last year was about 16 billion. And this year it just first 9 months is 28 billion. So just this corridor, real positive traction which we see with our clients, of course, given our strong footprint in Europe and working with the close to 800 corporate clients across Asia Pacific.
Yeah, you mentioned the issuance is quite robust. What about when it comes to the equity space? Do you think Asian corporates are finally returning to the equity markets in a robust sort of pace here when you talk about IPOs and the like? And what markets are really leading that charge, you think?
Yeah, even if you see the, just the M&A deal momentum of Asian corporates, whole of last year, total volume was about 130 billion, and I'm talking about just the cross-border, which is APAC corporates cross-border, and in the first 9 months, that number is almost 180 billion. So definitely robust momentum from Asia corporates, and especially I'd like to call out Japan, Australia, India, China, and Singapore. So after kind of three kind of flattish years of about 130 billion of cross-border M&A, we're definitely seeing an uptick this year, and specifically in terms of the sectors that we operate in, are focused on, which is energy, positive traction, digital infrastructure, and in some way, expansion of the footprint and diversification of manufacturing. So, that's been a bit of a positive surprise, in fact, for deal momentum on M&A of APAC in cross-border.
And when you look at these equity valuations, do they make sense to you? Or do you think what we're seeing for example, India, Japan, does that look sustainable? And do you see any sort of disconnect between, equity valuations and credit fundamentals now?
Yeah, I think, in terms of valuations, a large part of, some of the valuations are driven by AI, but, it is backed by, significant amount of investments within our, kind of digital infrastructure ecosystem, which we have visibility on. There is, I think, just look at one estimate from a next year perspective, close to $400 billion of potential investment, which is linked to AI usage, especially on digital infrastructure, be it data centers, subsea connectivity, cloud infrastructure, which needs to step up. So, a lot of that is fueling, the speculation. Of course, as companies move from pilots to actual execution and how that kind of pans out, that remains to be seen. But overall, just on digital infrastructure, there is considerable positive traction.
Uday, what we've seen traction in particular is in private markets, especially when it comes to private credit. Obviously, there's been some concerns about cracks that are emerging, but certainly this is something that you compete with as a wholesale bank, right? I just wonder, in Asia, it seems like the preference still is on traditional banking, but do you see much competition from the private space now?
Yeah, I think even in our focus, segments, if I just look at the volumes last quarter, globally for the wholesale bank, both in terms of lending volumes and fueled a lot by trade finance, that was up just a short tad below 6 billion in terms of just lending growth, and a large part of that was also fueled by trade finance and for APAC. So in the segments that we are focused on, I think clients where we've been engaged for the past 3 decades, there's considerable opportunity and growth that we continue to see across the markets.
That's good to know. Uday, I want to get to some of the markets that you operate in. Obviously, China is a big one this year, given the outperformance we've seen in equities. What's the client flows looking like to you? Do you think that there is more optimism around and foreign appetite for Chinese equities now?
Yeah, I think from our perspective, we've been in China. We've got 2 branches in Shanghai and Beijing for the past 35 years. So we're focused on large corporates and also our international corporates, which we serve in China. And if you see the macro, this year, China is being quite resilient. We're estimating growth to come in the vicinity of close to 5%, and even exports continue to fuel some really positive traction for China. What we're also seeing is coming back to my corridor between APAC and Asia, and I think China on the forefront, especially in the European markets that we see. I was in Budapest just a couple of weeks back, and a real focus on the output FDI from China into Central Eastern Europe in sectors like EVs, the whole battery storage ecosystem. So we're really seeing some positive momentum there. If you just look at Hungary, last year they had FDI of $10 billion, of which $5 billion was from China. So we're seeing a lot of the export momentum growth, but of course This year, if you see year to date, Chinese equities, have been kind of sluggish compared to rest of the market. But in terms of what we're seeing flows in terms of client traction and sectors is quite positive.
Would you say that the equity sort of derating is behind us in China, or do you think there still needs to be a structurally high sort of risk premium to put on this market?
Well, I mean, it's difficult to predict in terms of equities, but we're focused on what we're seeing with client flows, and just in terms of the overall macro. While there is an element of some amount of kind of macro divergence which is taking place. So on one hand, you have the Fed and the House view we have is a 25 basis points cut in December, another 2 in the first quarter, and meanwhile ECB is kind of steady in holding up for the next at least 18-24 months in our view. Bank of Japan, on the other hand, looking at a likely hike next month. So there is an element of kind of macro divergence, and why that is important. What we're seeing is as clients really fund in one currency, hedge in the other, and look at creating liquidity buffers. So that's the kind of traction that we're seeing across clients, including for our Chinese corporates.
And can you tell us more about those hedging strategies? What are you advising to your clients now, just given the different divergence in the macro picture there next year?
Yeah, so I mean, clearly, our financial markets business, that's core when we see, based on interest rate differentials, currency differentials. We've seen, over the last just 48 hours, significant whiplash in terms of the likelihood and the prediction of what's going to happen in terms of the Fed in December. It seems like over the last 24 hours now it's more than 80% likely that we will get cut. So in this context and with this macro divergence, if you're an Asian corporate and looking to either raise funding, we have a few of our clients which have diversified their funding and moved away from US dollar and had their first euro issuance, for example, in the last quarter, and that kind of while 80% of funding would typically be US dollar, but we've seen almost like a 60-70% growth in euro. So just in terms of currency, locking in certainty for transactions with what we call kind of deal contingent hedges for transactions, and that really comes into traction as we engage with clients and work through that complexity of ensuring certainty and creating liquidity buffers for next year.
It's interesting, yeah. Uday, I was going to get to the geopolitics. Certainly that's been quite ever-changing all year. Being a Dutch bank, obviously, we saw what happened with the Nexperia incident between the Netherlands and China. It seems like that's been in some ways resolved, but do you think that the recent tension that you've seen between the two nations, is that affected business in any way or your expansion plans in the mainland?
Yeah, we've been in APAC, including in China, for over 3 decades. So it's not for me to comment on a specific situation, but clearly our China business is almost 20% of our business in Asia Pacific, and we continue to be focused on our clients, and we looking at both in terms of our inbound inbound business, which is our European and American multinational clients, into APAC, and some of the outbound business where in our home markets, we're the largest footprint in Europe, and as we've seen some traction on APAC M&A deals as Asian corporates, basically increase their footprint and grow business across the European network. We continue to work with them in the sectors that we're focused in. So yeah, I think that business traction, and I mentioned about Central Eastern Europe, being a kind of a lead-in into Europe, and we're seeing continued flows and a bit of a positive surprise. I mean, you see for this year, just Asia is probably going to end at what 4% of growth, which is so we still have positive surprise on growth, and we see a lot of those flows between APAC and EU, including the Netherlands.
Obviously, India has been a bright, people are looking at maybe just the underperformance in the markets, but certainly people are quite upbeat, I think, of 2026. How are you viewing, the geopolitical landscape in India, for example? How are Indian corporates looking at this threat of 50% tariffs from the U.S.? Has it impacted their expansion plans in any way, Uday?
Yeah, I think the India growth story in terms of especially the sectors that we see it, which is the demand for capex on infrastructure, on renewables, and increasingly on the digital piece. I think that we've seen. We've seen, I think, an increase in some of those demand flows coming in, and that matches with with our house view that India continues to be growing at high sixes. Or at least it's the highest growing large economy now. So we're engaged, with our key clients in India, and as we work through, especially on the specific corridors that we can bring value, which is EU India, where we've seen positive traction, over the last 12 to 18 months, and also India ASEAN, and so there, and that story, which is based on infrastructure demand and capex, continues to be positive. So we're quite positive on the story in India.
How do you view the competition in the wholesale banking space in India now? Seems like it's heating up when it comes to foreign and private players. What's sort of the strategy for ING?
Yeah, I think welcome competition. Competition is always good. Our focus is the value that we bring to the clients, which is really threefold. I think one, clearly the sector expertise that we focused on our core 7 subsectors, and I talked about the positive growth we've seen on energy. In terms of both renewables and telecom, media, digital infrastructure. So these are sectors where we have core strength and help our clients to grow. The second, clearly our network in Europe. I mean, we've got the largest footprint across Europe, and as we have Indian corporates expanding and growing, both in terms of expanding their footprint and driving infrastructure, so that India EU corridor, I think we can serve and make a differentiating value vis-a-vis competition. And third, I'd like to also point out, just in terms of sustainability, I think first 9 months we grew almost 110 billion of sustainable finance, and which is up like 30% year on year, and we've kind of publicly stated a target of 150 billion euros of sustainable finance by 2027. So I would say these 3 key what we call the ING differentiators is the value that we bring to our corporates as we work with them. Over 800 of our corporates that we engage with across Asia Pacific and 4,000 globally. So, while competition is good, I think these are clear differentiators which we bring to the table.
Okay, it sounds like you're quite optimistic. What in terms of, do you need more people? I mean, do you need to hire more bankers in India? And how do you think AI overall is reshaping your hiring plans in the region now, Uday?
Well, overall, Ivan, I would say that we're quite focused on growth. Roughly of our global business for wholesale banking, APAC is about 12 to 13% today. Our home markets are obviously about 70%. But in terms of growth, clearly we see APAC as a growth engine across the multiple markets. We have clearly a right to play, and we've seen in the first 9 months, we've been growing significantly. In terms of to your point of the team, we've significantly invested, especially on our focus products like on transaction services, on our corporate finance team in APAC, and I would say over the last couple of years, we've scaled up our team across APAC by almost like 14-15%, and these are bankers on the ground in our various markets that we operate in.
So you're hiring more
on the sectors. We continue to grow our team, and if I think at the end of the day, I mean 60% of global growth continues to be delivered in APAC in a macro sense, including this year, where we're going to finish at about 4% growth in GDP, which is twice what the global growth is tracking to. So this is clearly a growth engine, but we're quite focused on the sectors that we operate in. So I would say Australia, Japan, Korea, and of course India are key focus growth markets for us.
Thank you so much for your time, sir. Uday Sareen, their CEO at APAC and head of wholesale banking at APAC at ING. Plenty more ahead. This is Bloomberg.